forget to reserve the 2XO for the DJ. We go shy you till we fall better get it. It's sweet for bed. This opportunity want make you take a shot. Life na for the pose, if you take a na.
Grand Rising, Grand Rising, Grand Rising.
Grand Rising.
That's the kind of energy, man. 1 in the morning. Grand Rising. Yeah, I like
Grand
it.
Rising.
Grand Rising. Grand Rising. So I like to hear that little energy come back at me in the morning. Makes me feel good. All right. Let's do this. All right, cool. Let's get straight into it this morning. Let's get straight into it. Let's have a look at the chart, see what's going on, etc., etc. I'm going to start on US 30. We're going to have a look on US 30. We're going to break down the strategy. We're going to look back at what we spoke about last week also, because all of those things played out last week. All right. Everything we discussed last week played out. And it's interesting. All right. So let's have a look at US 30 first and foremost. Let me try and do this. In fact, let me do this a different way. Let's do this a different way. Let's do it like that. Let's do it like that. All right, so, no, let's not do it like that. Let's do it like this. Sorry, so let's have a look. So guys, this is the US 30. Please tell me if my music's too loud as well. It should be complete background music. If it's too distracting, just let me know. I'll touch it down or turn it off, all right? Let me know. Should be background. So this is the US 30 market. I haven't touched this since last week, guys. So this isn't the one I made earlier. This is exactly the same. We've got some lines in here. These lines ultimately are saying to us that US 30 has been bullish, making higher highs, higher lows, higher highs, higher lows. And we're in this phase at the moment. And we identified over here, this area of liquidity above this all-time high over here. Okay? Over here. Now, that was January 2022. Okay? And we saw the market, boom, push up past that liquidity level. Okay? And as it pushed up past that level, when did it do that? It did that Christmas. Remember we discussed about it was about Christmas Day. This market decided to, push up over there. It's a bit before Christmas Day, not around Christmas period. And as the market pushed above this yellow line, which is that all-time high back from 2022 January, we've seen the market go sideways. All right. Have a look at it. If I go to my 4-hour time frame, can you see that market going sideways? I think it looks pretty sideways to me. All right. As it pushed up in here, made a high, made a low, made a relatively equal high, made a relatively equal low. It's ultimately going sideways in here. And we identified these two areas of liquidity, either side. Below here, we can see these little pound signs. Above here, we can see these little pound signs. Now, since us placing this line above here, we saw the market. Remember what we said, because we was discussing this and we were saying, look, ultimately, on a much bigger scale, this market is capturing liquidity and we may see it running in the opposite direction because we can see lots of reasons why it may want to run in the opposite direction. Those were these imbalances, this one here and this one here, which I remember is a weekly imbalance, daily imbalance. Let's have a look. Let me confirm. All right. There definitely are big monthly imbalances. Okay. For sure, and I'll put it in there just so I don't have to ask myself that question again. Big monthly imbalances here. These are big monthly imbalances here also, which definitely we can whittle down to have a look at them as weekly as imbalances to maybe get a little bit more accuracy. Have a look. Yeah, we could decide that we wanted to say that in here was a big old weekly imbalance. Okay, we do big old weekly imbalance. Could have a big weekly imbalance. Weekly imbalance. Sorry, a big weekly imbalance in here. Let me just mark that out, imbalance, and we can put in there weekly. All right, in here, if we wanted to get more accurate, there's some more little imbalances, but we don't have to keep doing it over and over and over again. The bottom line is there's reasons why this market could come down in this direction. Okay, we go to our daily. If I can mark that one as well. If we go to our daily, we can see all of these reasons why the market might want to come down here. All right, big daily imbalances, inefficiencies, fair value gaps, call them what you want. All right. And we can keep identifying them all the way down. So as we saw this market in here, the dilemma, which we spoke about last week, maybe it was Thursday, Wednesday, I don't know, the sessions are still there recorded, was that at the bottom of a range, I think we asked, and I think it was Snipes that said at the bottom of the range, we want to buy it. And at the top of the range, we want to sell. So the dilemma is, even though I believe this market wants to turn around, you can recall me saying that I believe that even if this market wants to go down, it will go up first to capture the liquidity. If I lie, I die. All right, remember me saying this. I said, even if this market wants to go down, because we was down here these times. Look, this is Thursday Breakfast Club, who's down here. Look, Thursday Breakfast Club, that's 6 a.m. down here. That's what that yellow line is. All right. Friday Breakfast Club, we're still around here. All right. And I said, even if this market wants to go down, it may push up first to capture the liquidity. Down here also was buy territory, because we understand we want to buy at the bottom of the range, sell at the top of the range. If we just use that basic logic down here, we'd have been interested in looking for buyers until we broke outside this structure. So we would been trading the consolidation. Can you remember? And I tell when I said, well, this consolidation range is about 700 pips. All right. Now, since saying that, this market has gone 700 pips and gone and captured the liquidity. All right. At the moment where we're sitting right now is that market has eaten the liquidity from above this level, and it's now sitting in sell territory, and ultimately an area which I'm interested in potentially. Well, I want to sell this market. I think there's a reason why this market would want to come down a little piece. However, let's look at it on a bigger picture. On the bigger picture, my concern is that we are sitting in the middle of this bigger range. This is what my concern is, all right? My concern is that we are sitting in the middle of this bigger range. And the bigger range that I've drawn there is that bigger blue range. You see those blue dotted lines? We're currently sitting, might as well say, in the middle of that range, which is a bit of a concern to me. Like, does this market want to do this? And get up to some all new crazy highs all the way up here? It's possible. Yeah, it's not going to do it in today. It's not going to do it in a heartbeat, but it's possible. Okay, it is definitely possible, and that is the concern. However, from a smaller basis, in regards to trying to take a trade, getting trades today and etc., we have seen how this market has definitely pushed above this all-time high. Let's have a look when. Here, okay, say January the 6th, all right, 2022, pushed above that level and captured all the liquidity that may be sitting above that level. And when it did that and it started to run in the opposite direction, it didn't run all the way, okay? It's consolidated at the moment and it's just captured liquidity, all right? Now, let me show you something. Some ways in which you can look at these markets and start doing some planning, all right? Can you see this here from this level down here? The market pushed up above here and captured liquidity above this high. Seems like a similar narrative, right? Seems like a similar story. The market was down here and pushed all the way up, capturing the liquidity with this wick over here and this little high over here above this level. And then what did we see? Where did the market, even though the market wanted to go up continuously, all right, which I'm saying right now, for where we are in this market, I don't know whether this market was to continue going up, but where did the market first retrace to? Where did the market?
Roughly 50%.
Roughly 50% of the impulse. Now, it didn't happen in a heartbeat. Good morning there, brother. It didn't happen quickly. Like, it didn't happen in a day, right? This is the daily candles. But this market here pushed up in here, captured liquidity, and over a duration of however long, retraced back down to exactly 50% of that level. And then once again, went up here, broke structure, yeah, and continued doing what it's doing. Okay. Now, 50% level is a point, but it really the whole area is from 50% going all the way down to your 786. That's why you see these two orange lines here, because this is our golden zone. Okay. Now let's use that same principle. Is it possible that this market, after coming and capturing liquidity above here and here, wants to make a retracement, okay, or could make a retracement? And if it could, where could that level be to? Could be around this level here, this 50% area down here, which would have closed up this weekly imbalance, sitting in a monthly imbalance, and it would tap into this 50% level of this monthly imbalance and closing this weekly level. So maybe this is on the cards. I'm talking about a much bigger picture. I'm not saying it's going to happen today. It's not going to happen today, because that distance from where we are to down into that 50% level, just so you know, FYI, is loads of pips. Thousands and thousands of pips. Okay? So that's the bigger picture. And it's something that I said to you guys need to do. Yes, you'll want to take a trade today, but you need to understand how to look at this market from a bird's eye view, and then start to zoom. All right, start to zoom in and see what's going on. So we zoomed in. This is the 4-hour time frame. The 4-hour time frame. This market, let me let you know for free, is a bullish market, making higher highs, higher lows, higher highs, higher lows. Yes, it did the hokey cokey, but this is a higher high. So just so you know, this market is still bullish. It's still a bullish market. All right, it's not bearish. Yeah? Even though I figured to myself, it's just grab liquidity and we may run in the opposite direction. It is still a bullish market. If I go onto my hour time frame, you can see here on an hour, and I'm gonna get rid of this little box because it's hurting my eyes. All right, I'm gonna get rid of some other little lines in here as well. I'm gonna clean this up because all this has passed, and everything that we said that this market was gonna do, it has done. You had the ability to trade it from the bottom, because I said to you that ultimately you'll be looking for a buy from the bottom of the range until we break outside of that range. I also turned around and made it very clear that this market, especially if it broke this 50% level, is going to be pushing up. All right, remember I said the 50% level of the range. It broke that 50% level of the range. And where did it go? Continue to push up. Now it's captured that liquidity. And even if this market doesn't want to start coming down, because it wants to capture, it wants to do some more mad stuff up here, I can see some reasons that this market might make a little retracement. All right, so on a smaller level, let me get rid of this. On a smaller time frame, I'm just trying to clean this up, guys, so I can't be bothered to delete everything. Start again. It's unnecessary because this is like us carrying on our analysis from last week. Okay, it's on a smaller level. I'm on the hour time frame. Just actually, let me go up to the 4-hour. On a 4-hour time frame here, let me highlight my concerns. This here, which is a 4-hour imbalance. Okay. All right. It's 4-hour imbalance in here, and the next imbalance is all the way down here on a 4-hour time frame. Anyway, it's all the way down here. Okay. Now, yes, on a smaller time frame, we're going to be seeing more 1-hour little blocks within those levels. Have a look. There's a 1-hour consolidation in there. So the same way I put that 4-hour, that 4-hour could just as easily, with a little adjustment, be a 1-hour. All right, so I'm just going to mark it in there like this. Okay, and I'm marking this for you guys so you can see it. Now remember, if you don't like marking it, or you can't see it, you find it difficult, there is an indicator. It's called the Fair Value Gap by Spaceman BTC. All right, I'm essentially going to go in here, and you're going to click in here, FAR, you're going to type in there, Fair Value Gap, and that's the one there by the Spaceman BTC. All right, it's the one that comes up at the top. And when you turn that one on, it will highlight, can you see? So if I was to remove all of these, it will highlight the imbalances. All right, even ones that you may not see. See, there's a little 1-hour imbalance in between this wick and this wick. Okay, the only issue is when you change time frames, it doesn't stay there. It will change with the time frame. So if I change to the 4-hour, the 1-hour one doesn't remain there. It just shows the 4-hour gap. You see the 4 hour gaps it's showing? The same ones I've highlighted. All right. So that's a little indicator that you can use, because that is an indicator that's not trying to predict the future. It's just showing you what is there. All right. I don't necessarily use it because I like to see it for myself, but it is handy if it's something that, you know, you want to make sure you haven't missed anything. And that's me flicking it on and off. All right. So right now, let's get to the nitty gritty, because people want to know all that's all good. But what about today? What about now? What can I do right now? Well, what you can do right now is you can understand the strategy. The strategy is I can't take any action. Yes, we broke above this liquidity level and we captured liquidity here, okay, which is this blue line. Yes, we broke above it. Yes, we understand that the market likes to capture liquidity and run in the opposite direction. Yes, we understand it's a Monday, so therefore the market might be a little bit stubborn first and do something else. But I cannot take any action before I see my strategy play out. All right. And on a basic level, our strategy is IC indication, which is a breaker structure, then a correction, which is retracing, and then it continuing. And depending on how aggressive you are, you can take an early entry when you see the continuation break structure, or you can wait for the continuation level to break where it retraced from. Now let me try and break that down so there's clarity. All right. You do not need no other strategies. I'm just keeping it true, because this strategy is about market structure and price action from the ground up. And it's about getting a confirmation before entering. Yeah. And then it's about managing your risk. Yeah. I show you guys intrinsically how, if you're an active participant and you're in front of the screen, you can manage your trade and you can take everything off the bone by managing your trade to staying in it as long as you possibly can. And I've shown you guys where you can place stops based upon your own appetite for risk and whether or not you can get in and out of trades. All right. So have a look here. As I've mentioned to you, even though I believe there's good reason for this market to come back down here, on a hour time frame, it's giving me no reason to be selling it, because it's a bullish market making higher highs, higher lows, higher highs, higher lows, higher highs. It's giving me no reason. All right. So maybe we're thinking to ourselves on an hour time frame, nice. All right. If I drop my time frame down to a 15-minute time frame, have a look now. This is the 15-minute time frame, and again, there is no reasons here on the 15-minute time frame. All right. I'm going to delete some of these things, guys, because they don't need to be here anymore. All right. There's no reason on the 15-minute time frame for me. Let me hide this as well. To be selling this on the 15-minute time frame. Why? Because 15-minute structure is looking like this. High. We're seeing some structure in here, possibly in here, on the 15-minute time frame. And this market hasn't closed below this level yet. It's currently trading within this high and this low. That's where the market is currently trading within. If I was to draw a box, it'll be like this. The market is currently trading within this box on the 15-minute time frame. This is where you have to understand that based upon what time frame entry you're going to take, the market's doing different things. Because on this time frame, the 15-minute time frame has not given me any reason to say I should be getting in for this trade. Here we've seen a little wick here, which has definitely broken the structure. Maybe that's a little indication on a smaller time frame. And the market's making a retracement back in. Maybe on a 15-minute time frame, it hasn't been clear of what this market wants to do. It's just trading within that blue line and the other blue line I just deleted. Okay. However, if I was on a 5-minute time frame, which in my opinion, guys, for now, which should be the time frame that the lowest time frame you kind of go. All right. Any smaller than that, I'm not trying to say you can't get amazing 1-minute entries. I'm not trying to say that I don't get down to 1 minute to get entries. I'm just saying it's windy down there. All right. And there's going to be a lot of things that you don't see, a lot of fake outs, a lot of, a little bit of news comes out. You're seeing a spike in one direction. It's a lot harder on the bones. All right. Now here on the 5-minute time frame, similarly, we actually can't see any break of structure in this 5-minute, because I'll still say about here, there's still 5-minute structure in here. So on the 5-minute time frame, this did close down below, okay, but the retracement has come and it's pushed back up and broken above some levels in here, some smaller 5-minute structure. So therefore, and what do I mean by that? I mean, look, if I was to draw some lines in here, this is the lines I'll draw, like so, and like so, okay, and that market has come and broken back above this level. So the 5 minutes not giving me the right information that I need. I can't trust 5 minute structure because it broke structure below, coming down here, and it came back up here and broke this 5 minute structure. So what is it doing? Is it going up or is it going down based upon the 5 minutes? Based upon the 5 minutes, I don't know. Yeah, based upon this 5 minute structure, I do not know. Okay, all I know is that the market hasn't broken below on the larger time frame. The market hasn't closed below this level. 5 minute, we've got a 5 minute closure here, but the 5 minute closure, I've got to erase that because it came back and it broke above this level. So I said, I can't really trust 5 minutes. On the 15 minute time frame, we can see here this little bit of structure in here, which is not swing structure, to be fair. You know, I prefer to say this was swing structure. Definitely this, but I prefer to say this. So you're still asking, Jay, so what's our plan? Well, our plan is, I believe that this market wants to run in the opposite direction after grabbing this liquidity. I believe it's possible that because of Monday, it's just doing the hokey cokey. So I'd like to see a clear confirmation, a break, a correction, and a continuation below some solid structure over here. So the only question I need to answer is what bit of structure on this push up in here do I consider as the solid structure? Do I consider as a swing low of that time frame? All right. Well, I'm definitely going to turn around and say this level here is definitely one. All right. Market actually came up here and actually exploded up here. This was the first liquidity grab. This actually was the liquidity grab. This push up here. Can you see it? Boom. This was the pushed up. Remember, this was our level over here of liquidity. Boom, pushed up all the way into here, and it got to a level, ran in the opposite direction, and closed some imbalances that's in here on a larger time frame. If you can't see it, have a look. It's 10-minute imbalance in here, got to 15-minute. You see the 15-minute imbalance in here. Let's go half hour. You saw the half-hour imbalance in here that it captured. There's more. This is what I'm saying. There's more down here. This market could have come and closed. But from that initial push up here, it came down and closed that imbalance. Okay. So personally, like I said to you, for me, I can't get involved in this trade until I see some clear breaks of structure, and I can't trust the 5 minute. Can't trust the 5 minute. And why? Maybe it's because it's Monday. Maybe it's because, things are just ironing itself out. It wants to do the hokey cokey. So I need to pick a time frame structure which hasn't been violated yet. That's going to confirm to me that this bullish energy, look at the bullish energy, look, up, it's going up, it's going up, it's going up. So I'd like to see this market break some structure, which is going to be this yellow line over here, this yellow here, break that, make some sort of retracement and close back down for me to think to myself that this market is now going in this direction. And where might it go? It might just go here to close this 4-hour imbalance. It might keep going to close this 4-hour imbalance. Yeah, and if I zoom all the way out, it might keep going all the way past this structure and capture the. In fact, like I said, if we get past this 50% level of this block, because this was the consolidation block. So if we come down here and get past this consolidation block, we're going, in my opinion, down here. Why? Because there's liquidity down here that has been left that hasn't been eaten. Look, let me show you on the 4-hour. I did erase that red block because it was annoying me, but if I put back the red block, which was like this previously, this was the consolidation block that this market was trading within here. It's just capture the liquidity above here, nam. And if the market comes back down here and breaks 50% of this consolidation area, I believe the market will continue to run downstairs and capture this liquidity down here. When we do capture liquidity, yes, we may see a bounce back, but then possibly this market continuing to do so here. So that's my plan for US 30. Whether it happens today, tomorrow, who knows? You can take a much more aggressive plan. I might turn and say on a 1 minute time frame. Like for example, let me show you the 1 minute entry, just so that you can see the exact same strategy, but on a 1 minute entry. All right. I'm going to get rid of this red block again. I don't think you guys need it. All right. But have a look. If I was looking at this here and I was extremely aggressive, meaning I'm willing to take the L's, meaning my win ratio is going to be a lot lower. All right. But maybe my R to R, my risk to reward might be very high. When this market came up here, remember, when this came up, this whipped up here, this now creates a point with liquidity above this high. So when I saw the market come and capture that liquidity again, look, nam. If I was extremely aggressive, I'm gonna drop down here to my 1 minute time frame. Have a look. I'm gonna put this level in here with a line. And I'm just showing you the strategy of how it's fractal, how it happens over and over and over again. The same line, the same principle about it capturing liquidity, what I'm saying on a much bigger time frame, and it might run down there to close the imbalance. I can say the exact same thing on a smaller time frame, that here is liquidity above this high. All right? And as the market pushes up here aggressively, look, boom! I'm looking for an excuse to get in there for a sell. Have a look at the excuse that I'm looking for. This is the impulse of it going in this direction. We make it a different color so you can see what I'm talking about. All right? And make it yellow, nice bright yellow. I might even thicken it up. Yeah? I'm looking for an excuse. I can't just hit the button for a sell up here. It's not showing me anything. I can't just hit up here because that's just like faith. That's like I had a dream. I've got to wait for somebody tell me out loud the strategy. Somebody tell me out loud the strategy so they can understand what I'm saying. Let's go.
Indication.
An indication. So if we're saying that this is structure here on a smaller time frame underneath here, let me make that white. All right, this is the next bit of some structure. There's some structure in here. There's some structure down here. All right, there's even a little bit of structure in here. I've got to wait for a break of that structure. And when that structure breaks, that becomes my indication. That's a small I, a little capital I. That becomes my, it's not even look like an I. There you go. It becomes my indication. So if I've got an indication that this market wants to go that way. Now I'm waiting for a retracement. The reality is this. When this market starts to retrace, that when this indication happens, I do not know where the indication is going to end. And I do not know where the correction is going to end. I can see here and I can start saying to myself, there's imbalances up here, there's imbalances in here, there's imbalances in here. I could do all of that if I wanted to. But I can't say this one, all right? But the reality is I got to just trade what I see. Have a look. This pushback on this imbalance that formed in here now, after that candle here, bear in mind I'm on a 1 minute time frame, I'm aggressive. I'm hungry, all right? We've broken this structure, giving me the indication. Look, that break of this structure here, the swing structure is the indication. There was some minor structure in here, but this is the major one of this 1 minute push. Look, this 1 minute little channel up here, this is major structure of this channel. Hope you understand that. Just like this here is major structure of this channel. Okay, because it's from the high to the low, the swing high to the swing low. This one's a swing high to the swing low. For us to draw the trend line, and it looks like this. Okay, it's broken that. It's giving me the indication. Now I'm waiting for correction. Now, for all I know, this correction is going to go all the way up in here. For all I know, I don't know. So I just got to read and react to what it wants to do. And it kicks back. And then it closes back down below here. So it tapped 50%. This little level here is 50% of this imbalance here. If you can't see it, have a look. This would have been the imbalance from here to here. The gap between here and this candle here. And this little push up, you might as well say is just underneath 50% of that little range. Now, at the point when it does that, and I'm seeing this momentum, if I was aggressive on a 1 minute time frame, the smartest trade would be here with my stop above these heights is the smartest entry on a 1 minute time frame. It's 30 pips. That's the smartest entry on the smaller time frame. The aggressive entry would be above this last retracement, but I warn you, there's lots of reasons why you could come and get stopped out. All of these imbalances above. So though aggressive with the highest risk to reward, this is the cleverest entry. Let's put both of them in, see which one succeeds, which one hits stop loss. And just that level of back testing can color your decisions in the future of whether when you take these trades, you're placing your stop above the swing high, or you're going to be a lot more aggressive because you feel as though you can handle the heat, and you're placing it above the last high. Let's have a look. And as we can see here, both of them are doing fine. Both of them, you should be risk-free, okay? And both of them, you're thinking to yourself, okay, this is a safer trade, but from a risk to reward basis, you haven't got too far, all right? The smaller trade, from a risk to reward basis, you definitely got to probably that's like a 1 to 2.5. Good trade, all right? On a more aggressive trade. This bigger one here, placing your stop above the highs. At this point in time, you've only got to a 1 to half, so you'd still be in the trade. Let's hit play, see what happens. This is just me showing you what the 1 minute entry looks like, all right? So on the larger trade, you finally got to your 1 to 1, okay? You finally got to your 1 to 1. And if you wanted to, you could make it risk-free. On the smaller trade, you're doing well. You're at 1 to 4. Yeah, you might as well say. Now, at this point in time, if I got in this 1 minute trade, let me explain something to you guys. I have to be able to identify where the larger structure is. So imagine I got in here in the 1 minute, and the reason why I'm showing it to you and I'm going over it is because I'm just showing you that the same strategy that I'm teaching for the 5 minute, the 15 minute, the hour is the same on every time frame. It just takes a different level of discernment the smaller you get. All right. So if I go to my 5 minute time frame on this little this wave that I put in here, where is structure? Well, we can see here that on a 5 minute time frame, my structure's not really that clear. Structure's all the way down here. If you really want to go there on a 5 minute time frame, which is what I said to you before. So I know that this market here, if this market is still bullish, if on a 5 minute time frame it doesn't want to break structure, it may turn around before we get to that 5 minute low. That is going to be in the back of my mind when I'm looking at this market of where I'm going to take my profits. So when I'm getting into this trade, I'm going to be looking at it like, personally, that might be a good target or a place where you might be able to take some profits. Gets a bit noisy in here, all right? You know, someone might turn around and even place it a bit before the noise here, before this little consolidation sideways noise, okay? That would mean that right here, when you tapped here, you take your 1 to 1 on your bigger trade, you take your 1 to 4 on the smaller trade, and you'll be happy. Why? Because over here is where some noise, there was some battlefield over here. And the market may very well tap into there, boom, and then start retracing and either stop you out or minimize your profits. Maybe not from the bigger position, you might be safe, but definitely from the smaller position, which you're currently at 1 to 4, you should be happy. Do you understand? Your trade, depending on what time frame you get into, is always going to be dictated by where your stop loss is, where your entry was, and what time frame. You don't see people taking 1 minute. I think I said this before last week. You don't see people taking a 1 minute entry for 2 pips and leaving that to run for 3 weeks for 10,000 pips. It just normally doesn't happen. All right. So it's the same principle here, and you have to understand when you want it to be grateful. Let's hit play, see what happens. Oof, still good. We are still good. All right, both of our entries are still good. Though it danced around, gave you heart attack, came back up here, came back down, so it's still good. But the market is kind of moving in this sideways action this Monday from this morning. Okay, let's hit play. Great. Now the fact that this market came and broke structure, broke below this level, can allow me to make this angle of how the market is trading down within a range, and therefore I'm expecting it to try and get down to the bottom of that range. All right, so both of these trades would have been fantastic. Your low risk trade is at least at a 1 to 2. Your higher risk trade is massive, 1 to 7, 1 to 8 trade. Now, just because that trade's played out on a minute time frame doesn't mean you've lost your trade or it's gone. It just means that was a smaller, more higher risk entry that happened a lot quicker, played out, but there's still other opportunities. And the other opportunities, what I'm saying is right now, the question is this market going to break structure and show me that it wants to come down here and close and fill up some of these reasons? Yeah, this big 4-hour reason in here. Is there going to be some sort of break of this structure here? Capturing the liquidity, making a retracement, closing back down below? If so, and I'll be able to get a good entry from that, there might be a fantastic little trade in here, looking like this, depending on where that retracement is. Looking like this. Why to here as well? Because that's where the imbalance level is, and that's where we've seen this action happening over here. We may see some little kickback. But this could be a great trade depending on your entry, how small that entry is. So personally, like I said to you, if you guys are looking at this trade here, I'd be placing my alerts so that they can do the looking for me below some breaks of some structure. Now, the only difficult thing here is it's a bit noisy in here. It's a bit noisy in it. We've seen it come up here, then we've seen it come down here, and then we've seen it kind of do a little minor structure, hokey cokey in here. It's a bit noisy. Here is definitely your green flag of a structural break. Yeah, 100%. Here is definitely like, yep, broke there, indication, some correction, some continuation. This is for sure. But there is these little smaller levels in here which are a little bit more iffy. And like I said to you, I prefer you guys don't go any lower than a 5 minute. So on a 5 minute, you are seeing some little levels in here. This is a little level, yeah, as well as here. So if I was to draw them in, here is a bit of a level, as well as here is a level. And on that first one, we have got a 5 minute closure below that level, i.e. indication, yeah? And then we have got what's happened next, guys. Now, let me put this line in so you can see it, because I know I'm looking at it and everyone's thinking to themselves they can't see jack squat. Let me do that and delete some of these other lines because it's confusing people. We did get an indication. This is the indication of where it want to go, where it wants to go. Then what happened next? What happened next? What happened next after the indication? What do we expect?
A correction.
And the correction came and closed up what? So I'm going to rewind it so we can see.
Imbalance.
Exactly. Every time, over and over. And guys, let me tell you something. We're going to drill this every day. Because it's the same. I can't teach you how to fix, the brakes today one way, and then tomorrow is a completely different way to fix the brakes. There's one way to fix the brakes. You got to take the tire off before you do this. I can't teach you how to fix the brakes with the tire on. It's the same. This gave us the indication of where we want to go to. At that point in time, you get your little rock eyebrow. Go, okay, interesting. And then we see the retracement and correction into that level. And then we see this is now currently showing some continuation. Now it's just showing some red candles here, but if I drop my time frame to a 1 minute time frame, there is an opportunity for an entry here. Now, my only concern is that in this range, we're currently in the middle of the range. And if we wait to a closure over here, we're at the bottom of a range. So can you see the battle that I'm having? The battle that I'm having is this: show me an indication, show me a correction, and stop showing me continuation. The only reason this becomes a battle, if I wait for it to close below this level, is about my stop loss. Stop loss has got to be outside of the range. Because if I'm saying that this market is trading down within these two white lines, if I place my stop here, well, I don't know, maybe I'm asking to get stopped out. That's the dilemma. The dilemma is this indication, correction, continuation. It isn't happening at the top of this little range. All right? So it has indicated at the moment it's corrected without breaking this structure. Now, if it doesn't come down here and pushes up here, doesn't break this level down and pushes up here, and then does it up here, well then great. Because now I am going to be able to get in at the top of that range. So right now, let me play it forward. Oh, and that's 1 second. That's exactly what happened. It came up here. This is actually good. All right. That dilemma that I was having of it indicating where it wanted to go and then correcting, I wasn't able to get in here on a smaller time frame because it didn't break close down below. And it showed me that it's not quite ready yet to make its decision. This is when we was talking about that 5 minute time frame. I can't really consider that 5 minute time frame because then it should not, this break here shouldn't have broken this level. This is why the indication, correction, continuation strategy is so powerful, because it gives you the confirmations. Because if you was a break and retest trader, yeah, it would have broken, it would have retested, you would have hit the button here, and the market did what? Later, stopped you up. Yeah. So this is exactly why the indication, correction, and continuation is so important. Because now I've seen it break above here and figured to myself, okay, this market is actually not ready to break this structure, even though this might be an indication, but not on the 5-minute time frame for me to consider it here. And therefore, the market, let me go to a 50-minute time frame, is trading within this level, as I mentioned, and this level here. So I need to see some confirmation of a break before I get involved. So personally, guys, like I said, in my opinion, you should place your alerts at a place which is a definite break of structure. Yeah, a definite break of structure, in my opinion, is there's 2 levels in here from where we are. It's this white one here, and definitely this yellow one here. So if you get a close below this white one here, close, and then a retracement that doesn't break the previous structure and close it back below, I'll be slapping my button for this sell. For sure, for sure. But at the moment, this market looks like it might decide to just do the hokey cokey over here. It might decide to push up higher. Because on a smaller time frame, remember I said to you on a larger time frame, this is bullish. But now, even on a smaller time frame, this is made a look. Here's the 50-minute low, 50-minute high, higher high, higher low. The next thing we're expecting to potentially see is a higher high. So even though I've got my dreams of getting in here for the sonnet coming down here, structurally, this market is still showing me bullish energy. This closure above here is a 50-minute closure above here. Now this becomes the indication. This little push above this level here, this now becomes an indication. This push down here becomes a correction. And the question is, am I going to be getting a continuation, which I can't see on a 5-minute time frame? Let me go to my 2-minute time frame here. You might say from the 2-minute time frame, which I don't want you there, but I'm showing you anyway, that this is a level of structure that market just about closed above. And then this is a correction. And if this market comes and closes back above here to structure, which is that high, is what the market may do. Because at the moment this market is bullish. Though I have this idea that this market is going to turn around and become bearish, like I just said, until it breaks that significant structure, it is still bullish. So it's just about how we read these things and whether we want to get in right now for a 5-minute time frame entry or we want to wait for 15-minute breaker structure. It's going to change whether or not we're saying that we're going to be buying or we're going to say that we're going to be selling. Because if you're going to ask me and say, okay, let's just trade with the trend, Jay, which way is the market trending? The market is trending bullishly. But the market did just capture a huge amount of liquidity. And if you're thinking about taking a trade for the day, it might not be in a bullish direction. Do you get what I'm saying? Do you understand how simple but complex this is? Do you want to take a trade today, or are you waiting for a much bigger breaker structure because you want to get in a trade and have that trade running for the rest of the week on that same direction? I don't know. That's down to you. Because there's going to be somebody who turns around and says that they made, oh, look at my charts. I made, $3,000 today buying or selling. And someone's going to say they made $2,000 selling. And you're like, rah, which way is it going? Well, it's going in both of those directions. It just depends upon, is that trader taking smaller time trades for today, or is that trader trying to take larger trades based upon a larger price action? All right. So I'm telling you right now, even though I've got my alert down here, if this market comes and breaks structure down here, the market is currently bullish. It hasn't broken any major structure. Get out of 1 minute, 2 minute. Any major structure here, higher high, higher low, higher high, higher low. What are we expecting next? To see a higher high. We're expecting to see a higher high. I'm ready if it doesn't give me the higher high. I'm ready if this market does this. Look, breaks that structure now. What structure? This here. Because that would be the last low before this swing high. I'm ready for it to do that because it would have then captured this liquidity here that you can see me identified by these pound signs. So I'm expecting to see some sort of retracement, a correction, and then I could be interested in getting in for the sell as this market closes that imbalance that I've got identified there. This 4-hour, 1-hour imbalance. So I don't know what's going to happen, but I'm ready for whatever the market does. It's Monday. I don't know. I'm placing an alert over here also. Place an alert over here also, crossing up. And I hope I hope it wasn't just so, I didn't confuse you guys. And I hope it was more so just understanding, why isn't these alerts placing? Oh, because I've got this on. All right. Crossing up. So look, we can see here, the market's made a higher high, higher low, higher high. Question is this market going to come down and violate these levels? Or are we going to keep coming up here? That's it. That's the answer. That's the question I'm answering. Because look, even on a structural level here, this push down here isn't a close below this level yet. It's not a close. This is just wick. It's not a close. So from an indication perspective, on a 5-minute time frame, it hasn't given us an indication it's ready to go down. And it hasn't given us a correction because it hasn't closed below this level of structure. So like I said to you, you're going to read and react to what the market does. Let's go look at something else real quick. I mean, I took lots of time on this, and it's more say about learning this language, guys. It's not about, you know, some kind of silver bullet or there's some strategy that when this happens, I do this, when this happens, I do that. That's just nonsense. It's like you don't know what you're really doing. It's like you got to flex. Yeah. You want to understand how to read these candles, how to do this. How we go? We're going to wipe this chart. We're going to click reset to be able to say, okay, what is going on here on this daily time, on this GBP USD? I'm going to go to my weekly. The first thing that you should all be saying is that looks like a bearish market. That looks like a market that has been losing strength over time. You'd be correct. And you'd say, well, if I like to sell when when things are expensive and buy when things are discounted, we may be in a great area to sell this market because we're at the top of this range. Yeah, we're at the top of the range. That's what you should be saying immediately. And then when you're knuckling down now, because you're not taking trades on a weekly time frame, on a daily, you want to zoom in to understand what's been happening. So what's been happening on this daily is this market was pushing up. Look, higher highs, higher lows, higher highs, higher lows, higher highs. Something changed, but the market came down here and it smashed some structure. Guys, this education is second to none. This teaching is showing you, smash this structure bearishly, grabbing the liquidity below some levels. Grabbed it, decided to run back in the opposite direction. Why? Because the market's moving waves. So if it smashes through one door, then you know, and this is the swing level. Understand this much. This here is the swing level. Yeah, from a swing high to a swing low. In fact, let's say here as well. This is a little swing high as well to a swing low. Yeah, I'm not going to say it's not just there. All right. So we see this market smash this bigger structure. Smash weekly. Have a look. Smash weekly structure. Smash. After that, we're expecting to see, if this is the indication of what it wants to do, a correction. This is why for the last however many weeks, this market's been bullish, pushing back in here, because it's a correction of a larger weekly break of structure. Let's go back to our daily. In that correction, the market made higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, all the way back to this little higher high. And then something started to change. This is how you have to break down your charts every time, like you're just reading it from the back of, like from the book, just reading the blurb. Because now the market here is going sideways, trading within this range. So therefore, is the market now bearish for me to get in here and try going all the way down here? Well, I don't know. This hasn't showed me any hand. It's currently not doing that. It's currently going sideways. So on a 4-hour time frame, the market is in here in this box. And we understand how sometimes these markets work. Even if this market wants to go down, we might see it grab some liquidity first before it does that. Might do. It might do, but we can definitely see some liquidity building up. Look at these equal lows. Boom, 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 boom. Yeah, we can see some liquidity definitely building up on or here and above any type of height. So on a smaller time frame, I'm looking at this and I need, though I want to be in for the sell overall, I don't know whether or not this is finished grabbing some stuff over here. I don't know. It's nice to think. It's nice to think I do know. I don't know. Because this market is still on a much bigger time frame, going to be bearish once it doesn't break this level here. So by all means, it could come all the way up here. Once it doesn't break that level here, it's still a bearish market. So I can't just be hasty now and just be like, yeah, it's turning around. So I drew some yellow lines on the screen. No, I need confirmation. And the only thing I know right now is this market is going sideways. It's going in this direction sideways. It was getting bullish, but it looks like the boat is slightly turning around. And let's pull out our Fibonacci's once again and let's just investigate. Let's have a look from here to down here. This was the 50% level retracement. Look at the golden zone. It's right in the middle of our golden zone in here. Is there a way that I can make that colored? If I can fill that area. I think I've got to fill everything, can I, if I do that? Yeah, I don't want to do that. Look at the golden zone. It kissed exactly 50% in our golden zone. And it's like it had a reaction, but we are still, until we break this structure here, I don't know. Let's go to a 1 hour time frame, see what's going on. 1 hour time frame is giving us a little bit more detail of that consolidation. This here, right here, is exactly 50%. Let's put a little dot in here of our golden zone. Let me make it orange. And since then, the market has been making ever so slightly lower highs and ever so slightly lower lows. This here is an ever so slightly lower low than here. Yeah? Ever so slightly. Okay, but personally, I can't do anything with this trade unless I'm trading the consolidation on a smaller time frame, which means that at the bottom of the range, I would have been buying. At the bottom of the range, have a look on the 1 hour time frame, break of this structure here, indication, correction, where down into this imbalance, continuation. I'd have to, that would have been my entry like that. We must stop all the way below here as my first stop, or over here as my safe stop. There's not enough in it for me to take that trade, so there's no way I would have taken it on an hour time frame. What do I mean? I mean, if there isn't at least a 1 to 2, or so 1 to 3 in a trade, I'm not going to even take it. Do you guys say I'm not going to get in a trade for that on the basis that I can make that. Get in there so I can make 0.2, risk a pound to make 20 pence. That don't make no sense. So I wouldn't have taken this trade in an hour time frame. Let's drop our time frame down to 15 minutes and have a look. The market pushed up over here. All right. It broke some. Let me put some lines in because it's going to help. Now, why have I put the lines in like this? Because this is the last high before this lowest point here. It broke this level on a 15-minute time frame. It made a retracement and it did close back above here. And possibly, if you hit this button here, try to hit it on a smaller time frame here and place your stop aggressively below the last low, you would have probably got stopped out by this little itty bitty wick here. You would have. All right. If you was trying to place it safe, you'd have placed it here. All right. And therefore, if you're thinking it's going to go to the other level here, there's about a 1 to 1.8 in it. Would I have taken that? Possibly not. Possibly not. I would have possibly, if I was so eager that he's getting a trade, would have probably been here and would have probably got stopped out by this wick. Yeah. Or if I took into consideration my spread ×2, maybe I might have just been outside of it. Yeah. But more than likely, if I were to be perfectly honest, I'd have probably been stopped out by this wick. Okay. But I personally don't want to trade no consolidation like that. So in our real life, I probably would have been like, let me wait to see this market actually break out the structure. That's where we're talking about patience, guys. Because I've already broken it all down and said that this potentially is the correction of this bigger indication of where it wants to go to. So therefore, I'm waiting to see on a smaller time frame, which where I just was, again, an indication, correction, continuation. That's where the patience comes into play. I don't have to get involved here. All I have to do is walk away from my computer or do something else, and I don't get involved in here. But as soon as I see that indication of some decent structure, because this here is the last low for the highest point. I want to see a closure below that. Closure below that. Let's go whatever time frame. Closure below this level, breaking this clear consolidation. Then some sort of correction. Then some sort of continuation. Now we're rocking and rolling. Now we are rocking and rolling, and then I have the decision to make of whether I'm going to be taking that as a nice aggressive entry just above the last high, or a medium entry above this 50% level, or maybe I'm going to put my stop all the way above here because I'm planning on. Remember, if I place my stop all above here, my target's got to be at least 3, 1 to 3. It's no point me getting into trades when there's not a potential of me actually making any money. So therefore, when I'm looking at this, where should I be taking trades to? No matter how long it takes, no matter what time frame, you are always trading to structure. Structure, 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 structure. These are your targets. And if anything, just before the structure. Not actually on the tip of the structure, that's where you're going to put your TP. Just before. So all of these here, you could easily just say, let me just nudge them up a little piece. So if I get in this trade here in this market and I get a very aggressive entry and the market breaks, retraces, closes below, I got to understand that a first milestone is going to be straight away me closing this imbalance. So every time we clear these blue lines, expect a retracement. That's what these blue lines are doing. Every time you clear one of these blue lines, so for example, we get in here and we clear this blue line over here, and I'm going to use this one here. I'm not going to use this one so much. I'm going to use this one below here. And we clear that blue line, capturing the liquidity, expect a retracement. So when you see your numbers coming back on you, you're not shocked. And when you come down here and clear this blue line, expect a retracement. After we've cleared out the liquidity, and after it comes down here, closing all this imbalance up, and maybe even pushing down further down here into these levels, expect a retracement. That's what your TPs also do. So you either take your money because you're happy, or understand that after you've cleared out those levels, expect to see your money running backwards. Yeah? Because that's how the markets move. They grab liquidity, they run the opposite way. They grab liquidity, they run the opposite way. They close imbalances, they run the opposite way. Yeah? Over and over and over and over again. So this is my plan for GU. For GU, my plan is I don't want to just jump in unnecessarily. It'd be lovely if I see a lovely break of structure in line with this little angle that I've made here. See this little angle I've made here? From this high and this high? It'd be fantastic if this little push up, let me put it in, make it a brighter yellow. If I see a nice break of structure near the top of this range, yeah, even if that's on a 15-minute time frame or whatever, I see a nice break of structure to be able to get in for a sell from up here. And if I do get into a sell from up here, I've got to understand a few things. First thing is that's why I want to see that be a nice break of structure on a 15-minute, 5-minute time frame, is that my target's going to be this equal low. Is this market going to break this equal low? I don't know. But I'm going to be like, yeah, this is definitely going to be a target. Now, if we do smash through there and I'm able to hold my trade, fantastic. Yeah. But I have to take into consideration these major levels of structure. The point I'm making to you here, guys, is that ideally, if you're savvy, if you're nimble enough, you could see this market structure breaking nicely in line with this little trend line that I've drawn here. If you can't see it, let me brighten it up. But a safer bet is to wait until this structure breaks and we're no longer consolidating. We're now breaking, retracing, closing down below. We're now in a bearish momentum. This is a bit more advanced and a bit more eager. Yeah. And I'd say this is a 2 compared to this being a 1, or this is a 3 compared to this being a 1 when the structure actually breaks outside of there. Okay. So, and the reason why I'm telling you that is this: we may not see this happen today or tomorrow. We may see, after Jay's telling you, yeah, we're going to break down here, may possibly get a sell, we might see this market just doing this for today. And then decide to go like this on our 15-minute time frame, or maybe even 5-minute, depending on the structure still clean enough. Then do this, and then do this. And I'm saying to you, I wouldn't be upset if someone said they did that on the basis they want to get down at least to these equal lows, but ultimately beyond. I would understand. Yeah, I would understand. Any questions, guys? Any questiones? Any questiones? If there's no questiones, I am going to love you and leave you, let you start your Monday with absolute vigor to go and, conquer the day, seize the day. I'm going to play a video from in the podcast, that Words of Wisdom podcast, and the guy says traders that struggle with psychology need to watch this. All right. So that's what drew my eye, and that's what I'm going to watch. I'm going to wish everybody, if you've watched this at home and you've learned something, to like and subscribe and share and blah, 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 blah. I'm going to stop the live stream. Everybody else who wants to stay in my trading floor, that's fine.